Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. It's going to be a very quick show because I have to run out to the airport. I really mismanaged my time this morning. But if I don't do it now, I may not do it at all today. So I figured I'll do a very, very, very quick update. Let's go to the charts right here. Not much to say about ToneBase.com. I am off to Romania in like not even 2 hours. I think my flight is like 2 hours away, but departs in 2 hours. I got to get to the airport. It's like a 30-minute Uber ride. So I'm going to keep this to 10 to 15 minutes. I am in Romania as of today. I didn't know if I was going to stream from the airport or not, so I just decided to do a quick one here. Then it's London, and then the Bali event. Here's the Bali event. I think we're going to close registration like Monday. What's today? Today is Monday. Close registration like Wednesday or something. And but if you still want to come and you're thinking about it, reach out to us immediately. Otherwise, it's over. Okay, let's go to the charts. Oh, when I'm in Romania, if you still want to come to the workshop, I can't even find my own workshops now. If you want to come to the workshop and then there's no more workshops, probably for a while. I don't have anything planned. Maybe one in December in Latin America and maybe one in Australia in January, because that's where I'm headed. Okay. Oh, wow. I just clicked on a 12-hour chart. Beautiful 9 and aggressive 13 preceded by a sequential 13. This could give a little bit of a bounce. I don't know why I went to the 12-hour chart first. Let's start with the weekly like we always do. And Barcelona. I keep being invited to Barcelona. I have a place to stay out there. I have a friend out there with a nice place. But I need to make it. Like, the world is big, guys. I can't make it everywhere. Do I think we'll hit 7,200? I do. I do think we'll hit 7,200. That doesn't mean that we have to hit 7,200, but I think we will hit this Fibonacci line. This is the 62% Fibonacci line, and you can see it at 72.31. I believe we will hit it. So that means I believe we will go lower than the swing low back in June. If the swing low back in June would have got us back to that $5,000 range, maybe even the $4,000 range, I would have been a full bull by now. But that didn't happen. I did not see that area as a sufficient pullback. This is a sufficient pullback. And now the challenge is figuring out where the low is. Is the low did the low just take place a few days ago? Is the low coming at 7,200? Is the low coming at 5,000? Or is the low coming under 3,000? And if you don't think it's possible for Bitcoin to go below 3,000, I think that's a problem. I think that's problematic. Now, I know my good friend Willie Wu thinks that going below 5,000 is pretty much impossible, but I don't. This is where I disagree. Okay. Anyway, the weekly chart remains bearish. The weekly chart has been, it was neutral for 1, 2, 3, 4, 5, 6, 7, 8, 9. The weekly chart has been neutral for 9 weeks. And then on the 10th week, the weekly chart decided to give you a direction. And I am using sequential and only sequential. Sequential finally said the weekly chart is shortable right here at $9,800. And look what happened. We are down since the sequential told you to short right here. We fell 22% and $2,150. That is significant. Okay. Now, you don't have to trade with sequential. I think it's one of the best indicators there is for trading. You can disagree. That's not my problem. That is your problem. Okay. If you disagree with my view on trading with sequential, it is great on high-level timeframes, way better than low-level timeframes. Though Joe Saz loves to use it for the 15-minute time frame. I can't wait to watch his presentation of trading the 15-minute time frame in Bali, Indonesia. Okay. Let me make sure everything is functioning properly. All right, cool. I hit a lot about there. Okay, cool. So how are we down overall? How much are we down overall? Overall, let's go to the daily chart. Here's the overall. I like to keep an eye on it. I really want to, I mean, we have fallen enough. A 44% correction is normally enough to say, hey, Bitcoin has bottomed. There's two problems with the current 44% correction. There's two problems with this. One of them is a more longer term look, okay? This particular 44% correction is coming after like not a common giant rise in the price of Bitcoin. And because Bitcoin went up a lot, I feel that a 44% correction is just not enough, and we need it to be beyond 50. My minimum for this correction was always 30%. Throughout this entire run-up, I kept waiting for a 30% correction to buy the dip, and the 30% correction never came. And the more we went up, the more of a correction I expected by percentage on the back end to buy the dip. And right now, the 44% correction barely is meeting my criteria to buy the dip. But like I said, there was two problems with the current 44% correction that I feel is still a little bit small. The other problem is the posture or the current TA environment of these daily candles. This is not a representation of how a bottom is formed. That is my other problem with this particular 44% correction. This is the kind of TA structure that you get before prices really, shit the bed, as well as sometimes the expression goes, okay? This posture is more indicative of a big drop instead of a huge rise. I don't even know what to compare it to. I don't really want to flip to other assets, right? But I know that the 200-day moving average is still rising. So I'm trying to find a bit of an environment. Like, this is the kind of posture that this reminds me of. Let's say this wasn't a giant capitulation. Those of you that may remember, I believe this capitulation was assisted by Kobayashi, the seller of the the Mt. Gox funds, okay? So what we're looking at here is this posture where we break, this broke the 200-day moving average, but at no point was there an entire candle, including the shadows below the moving average. So these two candles had their bodies below the 200-day moving average, but it was still, kind of hovering around the moving average with the shadows piercing it on the upside. If you look at this situation, you have multiple 1, 2, 3, 4, 5, 6, 7 candles fully below the moving average, trying to get back over it and can't do it. And these 7 candles have bodies and shadows below the moving average as the moving average is still rising. Let me get a drink of water. As the moving average is still rising and acted as resistance. Now let's go over to today. And then look what happened. We broke the swing low of these candles and we went lower. Now, once again, I'll be honest with you guys, when this occurred, this posture was also not indicative of a bottom to me. Now, this was a big rally from 6,000 all the way up to 10,000, but ultimately, this low did give way in a descending triangle and we fell all the way to 3,000. I never felt this was the bottom. I never felt this was the bottom. I never felt this was the bottom. And here is where I was very, very positive on a short. I don't have time to talk about this area and how I personally handled it, but you can see it in other videos. This here looks very, very similar to me to this environment here. And right afterwards, right after this rejection, we didn't go significantly lower. This was around 7,800. That seems interesting. And this was around just under 7K. fell all the way to, what was the low here? The low was 64, okay? So, but look at this, right? These candles are hovering in that 78 area, and this had a swing low of 64. And I want to have them both in the same screenshot. Oh, wow, I kind of have to go in 2 minutes. Let me see if I can get them both in this screenshot. Okay, right here. Okay, cool. And I can expand it. That's it. So right here, we rallied back up. The short-term moving average has not yet crossed the 200. That's right here. And the purple one is just starting to roll over. That's right there. To me, these are very, very similar environments. And I did not like preset this, right? So right now, we also fell to that $7,800, $7,700 zone. We're sitting there now. We're breaking this area once again. And this is what I'm anticipating right here, this same thing. Let's look at BitMax funding rate. If you look at the BitMax funding rate here, it was still pretty negative, right? Which was indicative of a rally, but we still went lower and the BitMax funding rate was still negative. And then we finally rallied, and this was a good rally. This was a nice 20, 30% rally, but it wasn't enough to get us to new all-time highs, and it eventually failed. So I see a similar environment. Now, if you look right here, the BitMax, I have two different BitMax funding rates. I don't know which one's more accurate. Doesn't matter. I'm looking at both of them. They are indicative of a potential rise, but look, right here, it is very negative, and then look what happened. It still went lower. So this is what I'm looking for right now. And it's not that I'm like saying like it happened a year and a half ago or 2 years ago, whenever the hell this was, April of 2018, and it has to happen here. Nothing has to happen. I'm just saying that even without looking at this, this is what I would be expecting from my experience of all assets, all markets, all TA, okay? I just don't see any difference between this environment here and the current. We're basically sitting right here, and any day now, I'm expecting this big candle down, and this area reversed at 6,400, and we might do the same thing. You know, we might fall to like 68, 69 or something like that, and then reverse. And this reversal could be strong. This reversal could be into the $10,000 range, exactly the way it happened before, as we get into the depth cross of the 200 and the 128-day moving average. Like there's just too many similarities here. Granted, we didn't have this big drop, and the rise wasn't as exponential, which could also mean that we may not get to new lows. However, we're not going to, that's too early to talk about. But right now, I am bearish. I remain bearish. Can we bounce? Yes. But right now, I am looking for something in the low 7,000s to high 6,000s. And from there, a potential rebound back to the $9,000 range. And then we reevaluate. And potentially, we can still make another low later this year. All right. That's it, guys. I gotta go. Just gonna glance at the lower level time frames quick. Same thing here. I am looking at a drop down to the bottom of the purple channel. This one is actually even lower. This one could take us down to the $5,000, like high fives, like 5.8, 5.9. Okay, that's it for me. The stock markets are gonna start trading. Markets aren't open yet. Here is oil. Here is silver. Here is gold. Nothing too interesting. Here's S&P. And the S&P gapped down, but we'll see. I'll take a look at it later. All right, guys, I gotta run. I gotta pack. I gotta run to the airport, and I will see you, some of you, in Romania. Bye, guys. Don't forget to check out Bali and all the crap on my website. Bye.